Good morning, everyone, and welcome to the Camp Financial Stock Market Update. Today is December 21st, 2017, and we're going to do a rundown of the systems that we trade, their performance for both the month of October and November, as well as, we may even just give like a brief view of where things look for the end of the year. So with that said, let's go ahead and jump in. We'll get started. We'll start with the oldest system we've been using. So we've been trading this since 2010, and let's look at the numbers. So actually this system, both months, the month of October and the month of November, we actually underperformed the S&P 500, which is kind of where we try to benchmark this trading system against. And so we made 2.06% in October and 0.83% in November versus the S&P at 2.6 October and 2.81 in November. So pretty close in the month of October, but definitely trailed in November. And then now we are we're leading the S&P in the final month here, December, way ahead of the S&P for the year. Basically, let me see what month was huge so the big month for the difference between our results and the S&P was the month of March, where we made about 4.16%, and the S&P was flat. It was actually down 0.05%. So that's why our numbers are quite a bit higher for the full year. Let's jump over to our technical trading system. So this is one where primarily we're looking at we got some technical indicators that we follow, but one of the big ones that's key in this one is the golden cross, or when the 50-day crosses the 200-day. This system has definitely underperformed for the year. It up 1.85% so far versus the S&P at almost 20. Month of October, the system lost 0.39%. In the month of November, it was up 1.09%. So definitely well behind the S&P again in those 2 months. I think it's outperformed the S&P 2 months this year, so it's definitely been a rough year for that trading system, and that's why we've diversified our plan, or how we trade. That's why we have multiple different systems, is because we know that there's going to be times where one's going to underperform and one will hopefully outperform. So it is what it is. It stinks, but like I said, that's why we planned for that as a potential issue. We'll jump over to our undervalued system. This is one where we're pretty much just looking for companies that are trading well below some historic valuations that the company has had. It's usually pretty much looking at longer term companies as well, right? It's look for companies that have been around for a while. I'm pretty sure every stock that we've ever bought in this is a dividend payer as well, which is also it's pretty important really in all of our systems. We like to trade dividend players. That's an easy way to compound your gains is by collecting the dividend and reinvesting, and that's one of the major focuses that we try to take. There's definitely some stocks that don't pay a dividend, and that's fine, and that we've bought as well, and that's fine too. Yeah, but this system, I'm pretty sure every stock that we've ever purchased in it is a dividend payer. So it outperformed the S&P in both months. It made 4.66 in October and 2.87% in November. Again, versus the S&P at 2.6 and 2.81. So just squeaked ahead of the S&P, basically the same in November. And so far in December, actually, it's getting trounced. I think it's pretty well. Let's see if there's a certain stock that's driving it really, or Exelon. Exelon has had a bad month. Marriott Vacations is down a little bit. Actually, you know what? It's not down. It's basically flat. Unum Group is the one that's down just a little bit. So then the last one was our most recent purchase in this system, and that was GE that we bought at the beginning of November, and it's still kind of teetering, kind of faltering there at now at $17.45 a share. So our arbitrage system underperformed in October and November, and we're probably going to shut it down just because it's really hard to get good arbitrage opportunities without a significant amount of funds, right? You got to put up a lot more money, and that just doesn't make sense. So it's trailing the S&P for the year. It trailed both the month of October and November, so it's going to be, like I said, probably going away, and we'll look to add maybe a more short-term trading system. We've done a lot of focus so far on 200-day, 40-week, longer-term trades. We may look to move into some 50-day moving average type trades, things that are a little more swing trade-esque, I guess. Things we're more going to focus on maybe getting in and out just a little bit quicker. So again, we'll see what we decide to do there. We're going to have to test and back test and trade and figure it out. That's kind of what we did with the arbitrage system. That's how it came about, was, well, let's see how it works, and if it's a good long-term opportunity, we'll stick with it. If not, we'll dump it before we would start putting it out there as a way for other people to trade their money as well. So, and now for our fledgling system. This thing has been around since early September, mid-September, so it's got just about 3 full months of history on it now. So that last 2 weeks of September, it got crushed, and then in October, it got pretty much crushed again. It wasn't crushed, it just wasn't good. And then in November, it made almost 7%, and it's up almost 4% so far in the month of December. So the full year, we're going to call it the year gains, even though it's not a full year. It's 3.5 months, but so it's up 2.7% versus the S&P that's up 8.4% in that time span. So still trailing, but I definitely feel like now that I'm starting to see the way some of the stocks are moving, some of the numbers are shifting, it's definitely a very good viable long-term trading system for us. It's kind of like our oldest system. If I go back and look at the original trades in it, just a second, I'm going to go take a look here. So again, the system's been around since 2010. Total percent gain is 268.98% versus the S&P at 227. So it's outperformed the S&P, not by a whole lot per year. 40 some percent over 7 years. It's a compound. If you take the compound average, you're probably looking at like outperforming the S&P by about 4%. So hasn't been blowing out the S&P, but it's done well. But if we go back and look at the initial trading in it, here we go. It was down the first 2 months versus. So the first 4 months it trailed the S&P, and finally in the 5th month it started to take off. And and from there it's done well. It's done pretty well. So again, that's kind of how I look at this newest system. Is the first couple months it's going to be painful. The trades are going to be, once the trades happen, they happen. If you lose money, you're going to trail the greater market as a whole for a while. But as long as you prepare well and then on the back end follow your system, as long as it's been tested correctly, odds are pretty good that it's eventually going to come back to beat the market. So those are our 5 trading systems, and we will leave it at that for today. And we'll have to get back in. We've been doing a lot of work taking a look at the Dow. And I don't remember if I said it on here or if I said it elsewhere, but Verizon Wireless was one I was loving down there around the $40 when it dropped down to 43, 44 at the beginning of November. Didn't have a lot of extra cash sitting around, so we didn't buy it, and now it's just taken off. So with that said, we're going to leave it there for today. Take care, guys, and we will see you next time.